Hello everybody, welcome back. Let's have a quick look at Bitcoin then, shall we? And see if there's any redeeming factors in this chart, which again, you know, for the record, is going down. I always say we. The video I made last night was about how I think we're going to get an imminent bounce, and so far, we did have an imminent bounce. I mean, it bounced pretty much where I said it was going to bounce for the reasons I said it was going to bounce. So let's just revisit those reasons, and then we'll move on to it. So on the hourly, we had bullish divergence for quite a long way since this big drive down here and there forward, so that kind of gave us an idea that we could bounce from there. And again, we could drive down another low and still probably get that bullish divergence still intact on the hourly. So another move down is still an opportunity, I think. 2 hourly is exactly the same, still got the bullish divergence in play there. 4 hourly, what have we got over here? Bullish divergence. And the daily, I doubt we'll have it. In fact, should we just have a quick look at the 12 hourly, see what that says? I doubt that'll have it, but no, it doesn't have it. So the lower term time frames are offering that opportunity for bounces, even on a next drive down. So this area again, you know, stating from way back, you know, where I keep mentioning it, but when we were talking about how this is likely to happen, or if it does happen, it shouldn't surprise us, to limit exposure perhaps, and especially for stocks, commodities, and crypto alike, because it was all going to be driven by the old Megatron fear in the market virus, and so, you know, we got that. When we got that, I said, look, we're probably going to end up in this area between 40,000 to 49,000 as an accumulation zone. So we come down to the bottom of there yesterday and the day before. No big surprise, we had it all planned out. We were talking about the whole thing the entire time. Now also, if we think about what we see here, and since the last couple of weeks now, we've been in a descending channel. These descending channels, until broken out of, are obviously going to descend, which is bearish, but it's a formation that usually ends up with a bullish breakout and then a reversal to a much larger extent than any of these triangles that you'll see being drawn. Nothing against triangles, they're great, but yeah, channels like this, if broken out of, would probably be a much better signal for a reversal when it comes to drawing lines and formations on charts. So we've come down to that 40,000-ish area, which again, you know, we map it all the way back to the major area, which is the parabolic top. There we had these tops over here after the big pullback. We also had these supports over here before the last leg up. So it is a strong area of support. There's a good reason for us to try and hold this area. And because my lines are fat and these wicks are quite all over the place, this could be as low as about 39,000 to as high as about 41,000. So that whole area, which is again a $3,000 area, which is quite a large area, is the area to hold before the next drive down, which again I still don't think it would be in a massive drive down. It would be massive from this area, and I'll show you what I think it would be. If we go to the monthly chart here, we can see that we've got the 21 exponential moving average here. We've also got this center of this Bollinger Band coming in around here as well, and all of that is about between 35 to 36,000-ish area. That would be a very likely possibility that we have an extremely large, at least just bounce, if not, you know, a bounce and then a slow and steady move up. Basically being the bottom. I think that is most likely to be the absolute bottom if we do break down below this major area of support that we're in right now. So if we just go to the 4 hourly, so I suppose moving on from the video I made last night. So there's a battle taking place, like everything, on the lower term time frames. Lower meaning 4 hourly for me, really, because 4 hourlies do drive decent moves when certain areas are reclaimed. And the main area is the 10 exponential and the 20 simple, which is the center of this Bollinger Band. So you can see that, you know, after making that video last night about the imminent bounce, the bounce did happen, but we're still struggling to reclaim this center of this Bollinger Band. 1, 2, 3, 4 in a row rejections. So rejections usually end up with a bit of a break, and if we were to break, the top of this Bollinger Band currently comes in about 43,400. We could even revisit the top of the range at best, which is about 44,800. Again, these are all descending, so this will get lower and lower with every 4 hours. It's a channel. The channel still remains. There is a triangle within the channel, which is the 40,000-ish area of support, and obviously the descending, and that again is technically a bearish. It's not bearish formation, but it's more bearish than bullish. Triangles that are, yeah, descending triangles are they favour the bears because the resistances are getting lower and lower and lower every time. So basically, giving diminishing returns if you stay within the formation. But however, we are looking for this to break out at some stage. Whether we break out towards the end of the apex, or we break out on this next big push, or we continue down within the channel and then break out at a later date. Still holding on to my bullish bias here. There's no real reason for me to be mega bearish on this one. I think the majority of the price action's already taken place, to be fair, for the downside, and there's not a great deal further for it to go. So I think we will be looking to print a major low, if not already in the upper 30s, and that would be probably just a wick into those upper 30s. But again, I'm quite happy with the way that it's panning out at the moment, because, like I say, we predicted this entire range as well, and so all of this being things that we've spoken about in advance, seeing them play out, I suppose that is the beauty of TA. And that's why we're enjoying ourselves, because it's almost like we saw the future. This whole area is being played just as we expected it to. So you'll probably hear people talking about the death cross. There's a death cross incoming on the daily death cross, daily death cross, death cross, daily death cross. So to be honest with you, in what I consider to be a general bull market, which is what I still think we are, I don't have any reason to doubt it. I made a video 2 days ago about why there's an extra downside on anything, that's pegged against the dollar. I won't bore you to death, but there is a video for you to watch if you want to know the things that are going on outside of the charts, which have downwards pressure on pretty much everything valued in dollars. And crypto is valued in dollars because we trade with crypto dollars. Stable coins are crypto dollars. So the price of a dollar impacts the price of crypto by default, because we trade heavily with Tether and other stable coins, and they're all pegged to the dollar. So whatever the dollar's doing does have major implications. You all know that Tether is the most traded coin in cryptocurrency. So when that has some kind of correlation to outside forces, basically the Dixie, then obviously there's going to be some impact on crypto, because it's the most traded cryptocurrency in the world by far. Tether is king when it comes to trading. It is the most traded crypto. Anyway, I've bored you to death already. If you're still here and still listening to me, then I urge you to go and watch that video if you want to know more about that. So there are outside, there's reasons outside of the chart which are adding downward pressure, and if we base that, if we think about that and not so much about what we're seeing on this chart, which again, this chart is still higher highs, higher lows, so consistent with an uptrend, consistent with a bull market. I'm still bullish on the Bitcoin bull market. I have no reason to doubt that we're still in a bull market. So I'll play it like a bull market, and we will look for lows. I mean, my orders were filled yesterday. First order that I had since limiting my exposure over here before the drop. So I'm back in to an extent on Bitcoin now. So I picked up a load of Bitcoin at 40,600. So that was my order filled. So I am putting more skin in the game. I'm looking to catch these knives. These knives are all designed to be caught at these levels. Way before, it wasn't an emotional buy, it was a buy order that had been put in there, after I'd sold over here. So it's all pre-planned. This is why I'm so casual. This is why I often find it so funny when I see these comments, arriving on my YouTube going, "It's a bear market, can't you see? Look at that close." Now, well, what I see is a consistent uptrend. To be fair, I know that you might see downtrends and think that that's a bear market, and I think we spoke about this briefly on the live stream last night. That what does bear market mean to some people? Does a bear market mean going down for a month or two? Because that's what I'd call a consolidation. A bear market to me is like the ones we've had in the past, which are prolonged downtrends that take 80 to 90%, or in the case of altcoins, almost 99% of its value away. That's a bear market. This isn't a bear market. This is a consolidation that's been pushed down the stairs by outside forces. One of them being fear-mongering within the in traditional markets of the Megatron virus, and then suddenly after that the tapering, which didn't allow for this to move straight back up like the one that we saw in March in 2020. So there's reasons for it to be going down, as well as basically consolidating from an all-time high. Doesn't look like a bubble pop. It doesn't look like a bear market, not yet. But this incoming death cross, we had one of these over here, didn't we? Death cross, it's a death cross. But the death cross more or less marked the bottom. So we got the death cross, then we got a push down to a significant level of support. Again, going back to this area here, major area of bounce. So we got that, and then we got a double bottom. The price had more or less taken place. And the majority of the downside had already happened by the time that death cross was finalised. We'll just look at it, we'll just revisit that and see what exactly happened. So the death cross was confirmed on this day here. The low had already been printed, hadn't it? The low had already been printed. The only thing that happened thereafter was a revisiting of that low to make a double bottom. That's all that happened after that death cross, and that is pretty much consistent with what I'd expect in a bull market. Now obviously death crosses in confirmed, but bear markets are different. They are extremely bearish. So if we are in a bear market, and this is the last death cross that we get for what could be potentially many months, then yeah, I mean, this seals our fate. But again, higher highs, higher lows on the larger term time frames isn't bear market. That's a bull market still, and all we're looking to do here is buy low, which is what I did yesterday. Right, so again, short-term time frames still got the bullish divergence. Larger term time frames, nothing particularly bullish. We've got bullish formations that are downtrending. We've got supports which are long-standing, a 12-month area of support. I think the low has either already been printed or will be printed in the upper 30s with one of those wicks, and then we'll turn around from there. I'm pretty confident in this market. I'm very happy with the way it's going. Like I say, orders filled yesterday, and looking really to find an opportunity to long. And I wouldn't, like I say, I wouldn't normally do that. That's not really my thing. But I think when we're getting down to these significant lows, I am looking for the bounce that carries us up. For at least to at least the top side of the range, being either 46 or maybe even 49. Pretty good looking stuff, I have to say. I'm very happy with the way this chart's going. You sell high, you buy low. That's all it's about, isn't it? It's all it's about. Nothing more than that. So I've bought. Now it's time to look at some price to move up again. Anyway, we'll leave it with you there. There are precursors to bear markets, obviously. That would be the breaking down below this center of this Bollinger Band, 35,000. I would be entertaining a bear market at that stage, and I'd be heavily looking for shorting opportunities. Not looking for any of that now. There's always more room to be a bull than there is a bear. Bears can only go so far. Bulls technically can go up indefinitely. Bulls are better than bears. Anyway, I'll leave you with it. I'll leave it with you there. Thanks for watching, guys. Hope you have a nice day. Take it easy.